Hello everybody, this video is a $400,000 mortgage example. This is based on my personal experience. I'm not a professional, so before taking important decisions, please ask for expert advice. Your down payment, and the $400,000 loan from the bank, permits you to buy the house you have chosen. The down payment is the initial equity, the loan is a debt. With your monthly payment, you give back to the bank a part of the loan, and the interests, based on the residual debt. By giving back part of the loan, you gain more equity from month to month. The monthly payment can be calculated by this equation, based on the loan amount, the interest rate, and the mortgage length. If we consider a mortgage of 20 years, and an interest rate that goes from 1 to 7%, you can see how the total amount of interest rises due to the interest rate. If the interest rate is 1% high, the total amount of interest paid in 20 years is $41,499 high. If the interest rate is 2% high, the total amount of interest paid in 20 years is $85,648 high. As you can see on this graph, in blue the principal amount you give back to the bank, in red the interests. Here the 1% scenario. Here 2% scenario. Here 3%. 4%, 5%, 6%, here 7%. If we have a look only on the interests, during the first years we pay a higher interest quote than in the last years. The reason is the residual debt, that at the beginning has the highest value. From month to month, the residual debt is reduced, you pay less interest and more principal amount. If we calculate different combinations, from 5 to 40 years length, and from 1 to 7% interest rate, we get an interesting table. If the interest rate is 1% high, and we select a 20-year mortgage, we have a monthly payment of $1,840, and a total interest amount of $41,499. If the interest rate is 1% high, and we select a 40-year mortgage, we have a monthly payment of $1,011, and a total interest amount of $85,484. Highlighted in yellow, you see that the total amount of interest is higher than $400,000. This means that in these cases for a $400,000 loan, you pay back to the bank more than $800,000, in the worst case even about $1,200,000. Be careful when you choose a mortgage, in some cases rent would be better. For choosing a mortgage, rent, or other loan amounts there are other videos and tables in this channel. If we compare the interest rates based on mortgage length, we get this graph. With a 10-year mortgage, the total interest impact is relatively low, even with a 7% mortgage or higher. With a 35-year mortgage, the total interest impact is very high, considering the loan amount. In addition to the monthly payment, if your down payment is lower than 20% of the price, and the loan covers more than 80%, then a private mortgage insurance is requested, to protect the bank. This could be from $100 to $200 high, until you reach at least a 20% equity with your monthly payments. I hope all these information are useful to better understand your mortgage. Thank you for watching Simple Money Tips. We are working on other business examples. If you have questions, write them down here. If you want, leave a like or subscribe to this channel. Thank you very much.